Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a bigger three-wave corrective structure after which we expect continuation to the upside. Here we're looking for a three-wave corrective move in a wave Y, hitting the common target area for your wave Y, which is between the 0.618 and the 1.236 trend-based fib extension, taken from the start to the end of W to the end of wave X, giving you a target area between 63.2k and 54.3k. The most interesting area of support inside this wave Y target area is around the 0.618. First of all, we have the low of a daily gap here at 63.1k. We have the value area low as well of this whole range volume profile, and we have also an important support resistance area of this range right on top of the 0.618, giving you pretty much a support area between 63.3k and 62.5k. The bearish scenario is a flat structure where we are looking for a three-wave corrective structure in A, looking for a bigger three-wave move in B, and then a five-wave C to the downside, moving below the low of wave A at 56.5k. Currently, we're then working on this wave B. The common target area for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the start to the end of wave A, giving you a target between 80.4k and 77.9k. If price continues and hits the 1.618 at 84.5k, it will significantly reduce the probabilities that this is a wave B and increases the probabilities for continuation instead of a move to the downside for a wave C. Inside this wave B, we are looking for a three-wave corrective structure to the upside. Most commonly, in a wave B, we expect a zigzag family structure in either a simple zigzag 535, a double zigzag, or a triple zigzag, but a triple zigzag is very rare, and a simple zigzag in a 535 at the moment doesn't have the greatest probabilities because of this first structure to the upside, counting a bit better as a three-wave structure instead of a five-wave structure. Therefore, I have a double zigzag WXY on my chart, where the common target for your wave X is between the 382 and the 0.618, taken from the low to the high of W, giving you a target between 66k and 62.4k. If price moves to the downside and hits the 0.7 at 61.1k, the probabilities for this scenario will significantly reduce. In both of these scenarios that I have mentioned, either looking for a wave Y to the downside or a wave X, we can be looking locally for a three-wave corrective structure in a flat, three-wave A, three-wave B, and a five-wave C to the downside. The most common target for your wave C here is between the 1 and the 1.618 trend-based fib extension, taken from the start to the end of A to the end of wave B, giving you a target between 66.3k and 62.7k, which also includes the 0.618 of course, and the main support areas, which is quite nice indeed. Zooming into this wave C, we want to count an impulsive structure to the downside in either a 1, 2, 3, 4, 5 or a diagonal, but because of all the overlap locally, a diagonal has the higher probability. Here we want to see all of the waves being zigzag family structures, as in an ending diagonal, either in a wave 5 or a wave C. In this case, all of the waves have to be part of the zigzag family. So a 3-wave 1, a 3-wave 2, then we have 3, 4, and eventually looking for a wave 5. The common target area for your wave 3 is between the 886 and the 786 trend-based fib extension, taken from the start to the end of 1 to the end of wave 2, nicely respected as you can see. We're then looking for a wave 4 to the upside, where we want to see a three-wave structure, where an important target for 4 is between the 382 and the 05 Fibonacci, taken from the start to the end of wave 3, giving you a target between 66.9k and 67.5k. Inside this area, we have an additional resistance box, the blue box here, between 66.7k and 67k. After wave 4, we want to see price moving towards the downside. In a contracting diagonal, wave 5, however, is not allowed to be longer in price than wave 3. So this red line, the 1-to-1, is your invalidation, taken from the start to the end of 3 to the potential end of a wave 4 around the 382, which is also the blue box over here, and the 1-to-1 is then sitting at 61.9k. The 1-to-1 is also below the important support areas that I have mentioned, summarized by the blue box here on my chart, as you can see. So that makes this area a very interesting area between 63.6k and 62.9k for potential bounce towards the upside. On the 1 hour time frame, price created a low and moved towards the upside and then started ranging. However, this range here was still creating higher lows on price, and that also creates a big space over here for price to retrace into, which would be good to see. It is also weekend, so most commonly in weekends price tends to range. So therefore the probabilities would be on the side for price to move into this space, preferably between the 0.5 and the 786 Fibonacci, taken from the low to the high over here, giving you an area between 65.8 and 65.3k. But the most interesting area arguably is the golden pocket in confluence with the 1 hour order block over here. After a bit of a retracement, it would be good to see price move towards the upside and hit that important resistance area for potential wave 4 in a diagonal. And the most important area of resistance is the daily naked point of control at 67k. So I'm still looking for price to eventually move towards the upside here, but a bit of a retracement first would be good to see. If you then go to the probabilities of the different scenarios, then on the daily time frame, the probabilities are higher for bullish scenarios where we take the all-time high, and on the number 2 spot we have any bearish scenario where 56k gets taken, which at the moment has lower probabilities, and then 56 gets taken before all-time high. Now on the 4 hour time frame, the probabilities at the moment are higher for this low to still be broken at a later stage instead of a bullish continuation from where we are at the moment. And on the 1 hour time frame, more locally over here, the probabilities would be higher now to see a little bit of a drop to move inside this space over here, also breaking the local trend of higher lows all the time, and then look for a potential bounce in the area mentioned, and then possibly a move to the upside to move towards that daily naked point of control, which is a very interesting resistance. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.